A very good morning, students. In this video, I'm going to explain the memorandum joint venture account problem number 3. So first go through the problem. Here X and Y entered into joint venture to buy and sell helmets. So here co-venturers are Mr. X and Mr. Y, and their business is to buy and sell helmets. And Y paid the following expenses: rent 10,000, salary 3,000, office expenses 14,000. So these are the expenses which were paid by Mr. Y. The next one, X purchased 1,000 helmets at rupees 300 each. So here X purchased 1,000 helmets and each helmet cost rupees 300, and incurred carriage and insurance rupees 7,000. So these are the expenses which were paid by Mr. X, and later on the whatever the helmets were purchased by X, that was sent to Mr. Y. And the last transaction, Mr. Y sold 980 helmets at rupees 500 each. Here Y selling each helmet at rupees 500 each, and took over the balance helmet, the balancing material, at an agreed value of rupees 400. So these were the transaction, and here we have to prepare the ledger account in the books of both the parties, which means here we have to prepare X account and Y account under memorandum joint venture account. So first prepare memorandum joint venture account. So as I said in the previous videos, memorandum joint venture account is very similar with joint venture account, and there is no significant differences between memorandum joint venture account and the joint venture account. So in debit side we are recording all the expenses, and in credit side we are recording all the incomes. Let's treat the transactions one by one. What's the first transaction? Y paid the following expenses: rent 10,000, salary 3,000, office expenses 14,000. So the total expenses will be 27,000, and these expenses were paid by Mr. Y. So expenditure side to Y account. How much? 10,000 plus 3,000 plus office expenses 14,000, total 27,000, and these were expenses, and these were paid by Mr. Y. So the first transaction is over. Now move on to the next transaction, the second transaction. What's the second transaction? X purchased 1,000 helmets at rupees 300 each, and then the price of these helmets were paid by X. So in expenditure side, to X account, under that helmets. How much? 1,000 helmets multiplied by 300 each. So it will cost rupees 3 lakh. And then he incurred carriage and insurance. Who incurred? X only. So X incurred carriage and insurance. How much? Rupees 7,000. So it clearly specifies that X purchased 1,000 helmets at rupees 300 each and incurred carriage and insurance 7,000. This is 7,000 rupees, and also the cost of helmets were incurred by Mr. X. So here carriage and insurance. How much carriage and insurance? Rupees 7,000. So total 3 lakh plus 7,000. So 3 lakh plus 7,000 will be 3 lakh 7,000 were paid by Mr. X. 3 lakh 7,000. So the second transaction is over, and the third transaction, Y sold 980 helmets at rupees 500 each. So sales is a income. Sales is always a income. So recording income side. So who sold helmets? Helmets were sold by Mr. Y. So to Y account. How much? He sold 980 helmets multiplied by each helmet rupees 500. So the sales amount will be 4,90,000. 4,90,000. So this transaction is also over. And the last transaction took over the balance at an agreed value of rupees 4,000. Who took over the balance helmets? Why only? Because the total helmets that we have purchased was 1,000 helmets. In 1,000 helmets, Y sold 980 helmets, and remaining helmets were took over by Y only, because Y sold 980 helmets at rupees 500 each and took over the balance at an agreed value of rupees 4,000. So the unsold helmets were 20 helmets that were taken over by Y at a cost of rupees 400. So this will become income for a joint venture, because while taking over the helmets, Y will pay the price of the helmets to business. So it's an income. So by Y account, in bracket write down helmets taken over. Helmets taken over. Helmets taken over at a cost of rupees 4,000. Cost of rupees 4,000. Now all the transactions were over. Now make balance of memorandum joint venture account. So credit side is more than debit side. So 4,90,000 on both the side. 4,90,000 on both the side, and the balance figure will be 1,60,000. Balance figure will be 1,60,000. This will be considered as profit. So to profit on joint venture, that is 1,60,000. This profit should be distributed to X and Y. But in this problem, the profit and loss sharing ratio were not given. In the absence of such information, the profit or loss should be distributed equally between the co-venturers. So for X 80,000 and for Y 80,000. So the total will be 4,90,000. 4,90,000 is the total, and the balance figure will be 1,60,000. In bracket write down B bar F. So the memorandum joint venture account is over. With the help of memorandum joint venture account, here we have to prepare the personal accounts of Mr. X and also the personal account of Mr. Y. First prepare the personal account of Mr. X. So while preparing the personal account, keep these points in your mind. So if the co-ventures purchased any goods or material, that should be debited with purchase account, or any expenditure paid by co-venturers, that should be debited with cash or bank. If any sales made by co-venturers account, that should be credited with cash or bank. If any commission received by co-venturers, that should be debited with the concerned item. So first prepare the personal account of X. So in the books of X, here X preparing his personal account. In this ledger account, we have to record only the transactions relating to X. So first go through the memorandum joint venture account. In memorandum joint venture account, the first transaction is related to Y, so ignore it. The second transaction is relating to X. So here we are preparing X account. So consider this transaction. In X account, X purchased helmets. So these are the goods, or these are the materials. Okay. So materials always debited with purchase. So in X account, to purchase. How much? To purchase rupees 3 lakh. Rupees 3 lakh. So purchase is over. The next one, again under X account there is a carriage. So carriage is a expenses. So expenses debited with cash or bank. So in debit side, cash account or bank account to cash. How much? Rupees 7,000. Rupees 7,000. Next, the next transaction is relating to profit. In profit, take only the profit of Mr. X because you are preparing the personal account of X. So in that we should record only the transactions of X. So what's the profit of X? 80,000. So here to profit and loss. How much? 80,000. And in credit side, by Y account and by Y account. So there is no transaction, there is no other transactions which were relating to X. So the X account is over. Now make balance of X. So the total will be 3,87,000. On both the side, 3,87,000. 3,87,000. The balance figure also 3,87,000. So this is the balance figure. So to bank account in bracket B bar F. This is the final settlement made to Mr. X. So 3,87,000. Now move to Y account. So Y personal account. So in Y account, we should record only the transactions relating to Y. So the first transaction is relating to Y. So this transaction is for expenses. So expenses is debited with cash or bank. So here to cash. So how much? The Y account is 27,000. 27,000. Next, the next transaction is relating to X. Now the third transaction is relating to profit. In profit, take only Mr. Y's profit. The profit of Mr. Y is 80,000. So here to profit and loss of Mr. Y is 80,000. Now the next transaction, Y account. So this is the sales transaction. So Y sold 4,90,000 worth of helmets. So if any sales made by co-venturer, that should be credited with cash or bank. So in credit side, by cash account. How much? 4,90,000. 4,90,000. The next transaction is relating to Mr. Y. So here Y take over the helmets at rupees 4,000. So if any stock or if any material taken over by co-venturers, that should be credited with purchase account. So in credit side, by purchase account. How much? 4,000. 4,000 in bracket. You can write down stock taken over. Stock taken over. Stock taken over. Or you can directly write down by stock taken over instead of writing purchase. Both transactions were accepted. Both entries were accepted. So here Mr. Y account is over. So make balance of Mr. Y account. So 4,90,000 plus 4,000. 4,94,000. 4,94,000 on both the side. 4,94,000. The balance figure will be 3,87,000. 3,87,000. So to bank account, the balancing figure. This is the final settlement made to Mr. Y. So here the personal account of Mr. X and also the personal account of Mr. Y. Both are over under memorandum joint venture account. So here the solution of problem number 3 is